Ever been told that Bitcoin is just for criminals, or maybe that it's too volatile to be a reliable investment? We're here to delve into the world of Bitcoin, a subject often shrouded in mystery and misconceptions. You may have heard whispers that Bitcoin is merely a tool for illegal activities, or perhaps its notorious volatility has discouraged you from considering it a sound investment. But let's pause and ponder. Are these assertions based on fact or fiction? Stick around as we uncover the truth. First off, let's address the elephant in the room. Is Bitcoin really the currency of choice for criminals? It's a question that's been floating around ever since Bitcoin first entered the public consciousness. The myth originates from the early days of Bitcoin, when its anonymity and lack of government oversight made it seem like an ideal tool for illicit activities. The infamous Silk Road marketplace, which used Bitcoin for transactions, only added fuel to this fire. But let's take a closer look. For starters, Bitcoin, contrary to popular belief, isn't truly anonymous. Each transaction is recorded on a public ledger known as the blockchain. This means that while users may remain somewhat anonymous, their transactions don't. According to a report from Chainalysis, a leading blockchain analysis company, less than 1% of all Bitcoin transactions in 2023 were associated with illicit activities. Compare this to the global black market, which makes up around 20% of the world's economy. Now you might be thinking, well, 1% is still a significant amount. But consider this. The United Nations Office on Drugs and Crime estimated that between 2 to 5% of global GDP is connected with money laundering and illicit activity. This is all conducted through traditional finance systems, not Bitcoin. Moreover, Tom Robinson, co-founder of Elliptic, a blockchain analytics firm, stated that Bitcoin is by far the worst choice of currency for criminals. Why? Because every Bitcoin transaction leaves a permanent traceable record. In contrast, cash transactions leave no such trail, making them much more suitable for those wishing to operate outside the law. Even online, criminals are turning to more private cryptocurrencies like Monero, which offer better anonymity than Bitcoin. So let's dispel this myth once and for all. Bitcoin isn't the preferred currency of the underworld. It's a revolutionary technology that has the potential to transform our financial systems. It's a tool, and like any tool, its use depends on the intentions of the user. So no, Bitcoin isn't a criminal's best friend, but a poorly understood financial tool. Now, on to the next misconception. Is Bitcoin too volatile to be a reliable investment? Let's begin by understanding that all investments, by their very nature, come with a degree of risk. Whether it's real estate, stocks, or commodities, the market's ups and downs are what make an investment. Well, an investment. It's this roller coaster ride that gives us the potential for high returns, but also the possibility of losses. So yes, Bitcoin is volatile, but so is every other form of investment. If we look at the stock market, for instance, we see periods of significant volatility. Remember the dot-com bubble of the late 90s? Or the global financial crisis of 2008? These were times of extreme volatility in the stock market. Yet we don't dismiss stocks as a reliable investment. In fact, it's worth noting that Bitcoin's volatility has been decreasing over the years. As more and more people and institutions adopt Bitcoin, its price becomes less susceptible to large swings. This is a sign of maturity and stability in the market. Now here's something to ponder. Volatility is not necessarily a bad thing. For savvy investors, it can be an advantage. High volatility means greater price swings, which can translate into more opportunities for profit. It's about knowing when to buy and when to sell, understanding market trends, and having a robust risk management strategy in place. Furthermore, Bitcoin's volatility should be viewed in the context of its overall trend. Yes, there are fluctuations, but the general trend has been upwards. Since its inception, Bitcoin's value has increased exponentially, outperforming many traditional investments. So is Bitcoin too volatile? It depends on your perspective. If you're looking for a safe and stable investment, then perhaps Bitcoin, with its wild price swings, might not be for you. But if you're willing to embrace the risk, if you see volatility as an opportunity rather than a threat, then Bitcoin could be a potentially lucrative investment. So, while Bitcoin can be volatile, it's not necessarily a bad thing for those who know how to play their cards right. You've probably also heard that Bitcoin is a major contributor to climate change, but is that the full story? Let's break it down. Yes, the Bitcoin network does consume a significant amount of energy. This is primarily due to the process known as mining, where powerful computers compete to solve complex mathematical problems in order to add a new block to the Bitcoin blockchain. This proof-of-work mechanism, while ensuring the security of the network, does indeed require a lot of computational power and consequently a lot of electricity. However, to get a more balanced perspective, it's essential to compare the energy consumption of Bitcoin with that of traditional financial systems. Think about the energy required to run countless banks worldwide, the manufacture and distribution of physical money, not to mention the energy consumed by millions of credit card transactions every day. When you consider all these factors, the footprint of the traditional banking system could arguably be said to be much larger than that of Bitcoin. But let's not stop there. It's also important to consider the source of the energy that powers Bitcoin mining. Recent data suggests a significant proportion of Bitcoin mining is powered by renewable energy. This is due to a variety of factors, including the mobility of mining operations, which allows them to relocate to areas where electricity is cheaper, often because of an abundance of renewable sources. Moreover, Bitcoin is driving innovation in the renewable energy sector. As miners are always looking to reduce costs, they are incentivized to find new, efficient ways to generate electricity. This has led to advancements in areas such as the harnessing of waste gas from oil drilling for electricity generation. So, while Bitcoin does consume energy, it's not quite the environmental villain that it's often made out to be. The narrative is more nuanced. Bitcoin's energy consumption is a factor to consider, but it's crucial to remember that it's part of a broader, more complex conversation about energy use, sustainability, and our financial systems. So, while Bitcoin does consume energy, it's not quite the environmental villain that it's often made out to be. Lastly, let's tackle the claim that Bitcoin has no intrinsic value. How true is this statement? In order to answer this, we first need to understand what intrinsic value actually means. In the world of finance, intrinsic value refers to the perceived or calculated value of an asset, an investment, or a company. It's the value that is inherent in the item itself, independent of market conditions or subjective interpretations. Now let's apply this definition to Bitcoin. Some skeptics argue that Bitcoin lacks intrinsic value because it's not backed by a physical commodity like gold or silver. But here's where they miss the point. Bitcoin's value doesn't come from a physical asset. It comes from its unique properties. Firstly, Bitcoin is decentralized. This means that it's not controlled by any government or organization. It's a peer-to-peer system that operates on a decentralized network of computers. This decentralization gives Bitcoin its independence and makes it resistant to censorship and manipulation. Secondly, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity, much like with gold or diamonds, creates value. When something is scarce, it becomes more desirable and hence valuable. Now let's compare Bitcoin to other assets. Take art, for instance. A painting doesn't have intrinsic value in the traditional sense. You can't eat it, you can't use it as a shelter, and it doesn't produce income. Yet, a painting can be worth millions because people perceive it to be valuable. The same goes for Bitcoin. Its value is determined by the people who use it and believe in its potential. So does Bitcoin have intrinsic value? Well, it depends on how you define value. If you define value as something that is physically tangible or produces income, then perhaps Bitcoin doesn't fit the bill. But if you define value as something that is desirable, scarce, and resistant to censorship, then yes, Bitcoin does have intrinsic value. We've walked through some common misconceptions about Bitcoin, but what's the real takeaway here? In our journey together, we've untangled the web of misconceptions surrounding Bitcoin, one myth at a time. We've dispelled the false narrative of Bitcoin being a tool exclusive to criminal activity. Instead, we've seen that the transparency and traceability of Bitcoin transactions can actually act as a deterrent to unlawful use. We've also debunked the myth of Bitcoin's volatility. Yes, it's true that Bitcoin has its ups and downs, but let's not forget the overall upward trajectory since its inception. Like any investment, it requires a long-term perspective and an understanding of market dynamics. Concerns about Bitcoin's environmental impact were also put to rest. While Bitcoin does consume energy, it's not as black and white as it seems. The network's energy consumption is part of a broader conversation about the energy use of all financial systems and the need for renewable energy solutions. And lastly, we've challenged the notion that Bitcoin lacks intrinsic value. Remember, value is subjective. To many, Bitcoin's decentralized nature, limited supply, and borderless transactions give it immense value. So what's our takeaway? Understanding Bitcoin is more than just believing common misconceptions. It requires a nuanced approach, an open mind, and a desire to delve deeper into the complexities of this revolutionary technology. So next time someone tells you Bitcoin is just for criminals, too volatile, bad for the environment, or worthless, you'll be armed with the facts to debunk these myths. Remember, knowledge is power.